Welcome back, traders. The most interesting thing about today is the breadth. It isn't getting any better. If anything, it's actually slipping. But price doesn't seem to care and just keeps grinding to new highs. We're climbing that wall of worry because rotation is doing all the heavy lifting. Tonight, I'll show you where the bid is, what the crowd is missing, and the exact triggers I'll be using tomorrow. Let's start with leadership. Today, we had uranium on top, then some crypto proxies and gold, then China. Today's board, we had URA, SOX, IGV, and XLC, and even utilities. That is not defense. That is default aggressive risk appetite mixed with a hard hedge. Take a look at URA here, the global uranium ETF. You can see it had a massive day with big, huge volume. That was on the news that the USA was going to start building a uranium stockpile. So that kind of got all those uranium names moving. Things like URA, Oklo had a huge, clear that off. Oklo had a huge day. SMR had a big day. NNE probably had a big day. Yep, there it is. Anything related to uranium went crazy today off that USA headline. Why does this matter? Typically, when offensive sectors lead while breadth sags, it means flows are targeted and not broad. That favors stock picking over some index hugging. As we've been saying for a while here in the community, it's been a stock picker's market. It's been a feast or famine. Your stock could be absolutely ripping, or your stock could be down in the dumps. ETF buyers will chase the same liquid leaders, but they'll starve the laggards. And remember, just because the market is up does not mean your stock is up. This is a selection market. Keep that in mind. Now, if we dive into this uranium trade a little bit more, as you can see, uranium's just kind of been building this base here for weeks. Today's break wasn't random either. As we mentioned before, it was on the US policy clearing regulatory bottlenecks and aligning with UK on fuel cycle support. That unlocks massive capex. Price was compressing in this base and then expanded. This is a classic move. When we see stocks moving sideways, we like to mark high points that stick out a little bit, and we watch for candle closes over. As you can see, we closed massively over this range today. But in normal trades, we like to see it hold this prior range for at least 2 sessions. If we take a look at Oklo here, it's the same thing. We mark this previous high right where we opened today, and we just were off to the races. A fun little fact with stocks in general is that their first close above 90 is usually about a 75% chance that it goes to 100. It kind of acts like a magnet on the initial run. Now, it's not always promised, and it's not always going to be promised to be the next day or even the next week, but the flow tends to pull it up to 100. If URA and uranium fail back into this base that it's been building, I'll watch for a reclaim of this with a higher low to re-enter. Something else we need to keep an eye on is how semis are not just one trade. There's compute versus memory versus tools. Everyone says semis is like it's one ticker, and it's not. You've got compute, which is CPUs and GPUs, memory and storage, which is DRAM and NAND, and tools like lithography and process control. The flows rotate within that stack based on sequential growth and supply signals. Memory's been ramping up like crazy. Samsung and Hynix commentary and pricing upticks hint at DRAM and NAND tightness. That pushes MU, WDC, SNDK, and stocks like that up higher. These things have been on huge runs, and we've been all over it in the community. We've been in Western Digital for a few weeks now. We've been all over this MU. Clean this chart off. We were all over the MU move too in the community. We had this 130 level from this previous earnings marked off, and we've been in it ever since. We saw it pop down here in volume, and that's when we got in. We watched this 130 for resistance, and if it broke, we knew we were going to go higher, and it's been ramping ever since. This was a beautiful trade in the community. Now, if memory expands, tools must deliver. Let's keep an eye on things like ASML, which have been on a tear, because you're going to need the lithography machines to make all the chips. Things like KLAC and LRCX are going to be at or near highs as well. This confirms factories are actually ordering kits. Compute leaders can underperform while their sequential growth has been slowing, even if the absolute level is elite. That's how flows migrate without killing the theme. These are things that you need to keep an eye on. You can't trade semis as one name or one ticker. We've been all over this memory and tools flow rotation in the community, and we've had some really awesome trades in it. Trades that we haven't even had to worry about or really think about. We've just been moving our stop losses up. We've just been moving our stop losses up as the stocks go higher to mitigate our risk and make sure we lock in profits if something crazy happens or we get some big gap downs or something like that. But again, managing your risk is all up to you and what you're comfortable with. These memory stocks have been on such tears, I wouldn't just blindly chase them. I'd wait for pullbacks to get in. Let's not forget that Micron has earnings coming up next week on Tuesday the 23rd after market close. Now for things like ASML, KLC, and LRCX, these are a little different. These have a lot of room to the upside still to even get back to their highs. I'll be looking for more continuation entries on these names as long as the VWAP aligns. I mentioned before that the breadth isn't euphoric. The upvol minus downvol is slipping on the weekly. Summation index is below zero, which often cools markets for a month or two. Yet we're making new highs. That is simply just rotation masking deterioration. Even our RSI is still pushing higher. I'm looking to see though if the RSI will peak out here and create a negative divergence as SPY is going higher here and RSI peaks out and starts to roll. We get a negative divergence here. I'll keep a close eye on this. Now, how do I use the fact that rotation is probably masking some deterioration here? I'll expect chop and sharp rotations rather than clean trends in the index. I'm also going to start demanding better location on entries. I'm not just going to be blindly chasing anymore. If breadth is soft, I don't chase green candles. I wait for VWAP reclaims and higher low entries, opening range breakouts while VWAP aligns, or I look for solid news gap fills on failed leaders. A simple filter if you're struggling, only add long risk on a day with net up volume. It's really simple, but it's extremely effective. Now, what does the crowd get wrong and how do we stay objective? Bad takes travel faster than 10 Qs. Things like AI is over or Oracle won't get the orders. Meanwhile, equipment bookings are at highs, cloud backlog is booked, and memory fabs are restarting lines. You don't need the rumor account. The supply chain is the tell. If you guys remember a few years ago, back here in 23, on the video, and people were saying it was a scam, it was fake, it was this, it was that. You had all kinds of things out there. People were saying their accounting was fraud, they were round tripping, all this. And a lot of people missed this move from 40 all the way to 170, 180, just because there was these rumors going around. People had missed the move already and they were jealous, they were mad. So just ignore the crowds and the noise and always remember to stay objective. Some principles that help you stay objective. Price matters more than opinion. Always watch price action and what it's telling you over what someone's opinion is telling you. Sequential growth beats a headline EPS miss every time. Follow who must buy what next. Indexers, ETF rules, and fund managers that are chasing acceleration. Now, if we take a little bit closer look at SPY here, it's advancing into what's called a frozen rope. For all frozen rope is just a really tight range here. Tight ranges that grind until they don't. Respect this trend, but only add on confirmation. We need to keep an eye on this because once this breaks, it could be setting up for something ugly. But don't tell the market what it's going to do. Let price tell you what it's doing. I'll be using a few rules to trade SPY here. I won't be adding on my index longs unless I get things like an expansion bar above this rope with volume, a pullback to an EMA or VWAP with a clean higher low, or a red to green reclaim after a quick flush. I'm not going to chase this tightrope. I'm going to wait for clean entry. We jump over and take a look at gold. Clean off this chart here. Gold and miners look like a policy hedge more than inflation 2.0 here. Crypto proxies bid for the same exact reason. The 10-year can't break 4% into the FOMC meeting this week. Market has already priced in the 25 basis point cut. If we get 50 or a hawkish dot plot shift, expect a quick volatility pop and a sector reshuffle. Now, things I'm going to be keeping an eye on into this FOMC meeting this week. If yields spike and tape wobbles, I'll buy leaders at pre-planned pullback levels only if they reclaimed VWAPs and hold. If the Fed threads the needle and yields fade, I'm pressing continuations in the leaders from tonight's watch. Some things I'll have on my watch list tomorrow. I'll be keeping a close eye on uranium, things like URA, CCJ, ACLO. I'll buy breakout retests or higher lows above VWAPs. I'll be looking for invalidations though as well. If they go back below the retest low, I'll just let them go. I'll be keeping an eye on memory and storage, things like MU, WDC, STX, names like that. I'll be looking for the W neckline retest on some of these names or an opening range VWAP alignment. My targets will be prior swing highs or measured moves on the base height. I also like things like ASML, LRCX, KLAC, as they've been on absolute tears. I'll buy continuations, but only with opening range breakouts and VWAPs. No blind buys here at all-time highs. I'll also be keeping an eye on gold and GDX as hedges. I only buy on dips to moving averages with reclaims, and I'll probably keep my size smaller since we got the Fed meeting this week. I'll be keeping a close eye on index levels. I'll have the levels marked off tomorrow that we like to keep an eye on in the community. If you're in there, you know what I'm talking about. Those have been great points for us and given us great trades. A quick execution checklist for tomorrow. The first 10 to 15 minutes, I'll just observe. No hero trades are necessary here. I'll confirm acceptance above or below the VWAPs. I'm only going to take A+ entries, VWAP reclaims, higher lows, opening range VWAPs, or clean gap fills. I'll set my trail at flag tops, and I'll log every trade with reason and stop. I know it's another quick video tonight, We've been doing tons of after hours trading in the community lately, and it's been great. There's been lots of big moves and lots of money to be made after hours lately. Now keep in mind this is a rotation tape. Our breadth isn't euphoric, but our price is climbing anyway. We're going to trade the leaders with acceleration, not stories. If you want the levels in the pre-market, live reviews, live trading, and even a strategy library that you can start using the same day, join us. Waitlist is in the description. Head over to asymmetricedge.org and check it out. Get your name on that waitlist because the next round of invites will be going out soon. And after that, they'll be closing for a while so I can meet everybody that joins and you can ask me some questions. If you get any help out of these videos, please consider sharing them with a friend. I just want to show you guys this real quick. It's just a little screenshot of the brokerage account that we trade in the community, or that I trade in the community. I get a lot of questions like, are you consistent? Do you actually beat the markets? Can you do it over a period of time? And if you go to our website, you can see a video of me logged into my brokerage account showing you guys proof of this. Or I think in that video, the account was up over around 3,000%. But here's a little bit more of an updated one. This is a pretty aggressive account, but these are the kind of things that we do in the community. We have a 2,549% return from last May to this September. Now that's pretty good if you ask me. That's what we do over at asymmetricedge.org. Leave a like, drop a comment, and consider subscribing. It helps us out greatly. Thanks again, and I'll see you in the next one.